Hello, mic test, mic test. Right. Hi. Welcome to, this is a stream and a recording. I'll be going through the next question 3 that my friend sent me. For the other two questions, I kind of went through most of the, calculation parts. Um, and if you're interested, please do check it out on, I think the Twitch still has the VODs up as of today. Um, but if not, you can always go to YouTube and it'll always be there. And just, if I happen to think of something um, that could help you understand this topic a bit more, I will actually add extra videos on top of it. So yeah, do look out for those if you want to learn more or you couldn't understand this. Feel free to always reach out to me and just say, hey, I don't understand this part. Oh, I forgot to update my stream title. Okay, well, that's fine. Uh, right. So that is that. And now I'm just waiting for my friend to get ready. So for those of you who are tuning into this later or even now, feel free to, grab your pen, your paper, and your calculator. I've got mine right here with me. It's followed me for many years, to be honest, and it's still good. I'll say it's one of the most cost-effective tool that I have so far. And yeah, um, I just came back from a full days of work, so as usual, I don't sound very enthusiastic, but just that doesn't mean that I don't, you know, put in a lot of effort for this sort of teaching. I try my best to understand where, at least right now, my student is coming from. So, in order to really cater teaching to said student, so I keep thinking of analogies or things that we all can really somewhat relate to as examples that are used to illustrate certain accounting principles. Just so that make things a little more interesting. But as for now, at least for these questions, the education level is GCE O levels. Um, and the financial reporting standard for this sort of examinations is not the USGAP because GCE is more of like a UK and some Asian countries kind of examination. Not sure where else it's held, so if you do know, just drop a comment down below or you type in the chat. I'll always be looking out on chat as well. So if you have any sudden burning questions, feel free to uh feel free to drop them in the chat and I'll see what I can do. Either I postpone it to near the end and I'll answer all of it, or I can answer on the spot depending on what it's like. Hey, yeah, so we are live right now. Are you ready? Yeah, okay. Yeah, hold on. Okay, you are now on mute. You can
Hi,
introduce
chat.
yourself. Yes, hello. Well, I'm pretty sure more people will be watching this back instead of being on stream itself, but it's
Right.
okay. Yeah. All right. So let me just remove this. Without further ado, do you want to just start on this topic or
Yeah.
rather this question?
Yeah. Sure.
Okay. So, tell me what do you find difficult about this question? Which parts?
Uh, the hardest part was just the
Hmm.
like getting the statement down.
The statement.
Uh,
Okay.
yeah, cause I tried to practice writing down the inventory statement,
Hmm.
or however you call it. Uh, that part, it's just self-inflicted, but that's just to me.
Ah, no. It's
Yeah.
it's it's normal. It's normal. Um.
So,
Well, I think that's near the end of the entire question, right?
yeah.
Okay. Then do you want to go through this question bit by bit first with the first few
Yeah. Sure.
parts? Okay. So, the first one is more of a recap question. So, in your own words,
Right.
what do you think FIFO means. So first of all, what is FIFO?
FIFO is first in, first out.
Yep. Okay.
The method dictates that the inventory is taken or recorded
Mm-hmm.
first. So
Mm-hmm.
must be the first to be sold or used.
Okay. Maybe to rephrase what you mean, do you mean whatever you buy first, you also sell
Yeah.
first?
Yeah.
Okay. Yeah, so buy oh. Okay, buy first, sell first.
Yeah.
Right? Okay. Alright. Well then official definition is obviously not this easy. So
On the answer sheet, they say that FIFO is a method that assumes that inventory which are purchased first are to be sold first, and the ending inventory is hence valued at the latest cost of purchase.
okay. Yeah. So the second statement, like the second part of the answer, is
Yeah.
just the logical conclusion of what happens when you sell what you bought first.
Mm.
Because, if you can imagine, all your earlier stock is sold, right? So what are you
Yeah.
left with? You're only left with those that you bought later, right?
Right.
And therefore, your inventory value will be based on those things that you have already bought later. So
Right.
the second statement technically is redundant, but as most people know, those people who come up with definitions, they want to more words equals to more good, I guess.
Right.
Yeah, but to summarize in four words, first in, first out, buy first, sell first. Okay?
Right.
Yeah. Hopefully that is clear. Alright. Okay, so you state how ending inventory must be valued. I think you answered that question. But
It's part of the model answer, right?
no, don't read the
Not
answer. Just okay, in your own words, how do you think it must be valued? Mm-hmm.
This part, I wasn't exactly sure what they're asking, so I skipped on this part. I have no idea how what they're looking for exactly here.
What about this hint?
Lower, prudence.
Not quite, not quite. We kind of went through this in the first lesson, so it's okay if you don't remember it. Two
Please refresh
conditions
me.
and the lower of the two. So what are the two?
Two conditions lower
Okay,
of the two.
ending inventory must be valued. What does this mean? What do you think this question is asking for?
Uh,
Mhm.
the and so the end of the statement. So after
Mhm.
all the costs and all the things that happen to the
Mm,
inventory.
okay.
So yeah.
Does this question make it more straightforward?
How do you value inventory?
Mm-hmm.
At cost of sales? As
Okay.
a cost of sales?
Cost and what happens when the market value of your inventory drops below the cost?
Depreciation?
Not quite, not quite. Depreciation has a different usage. Usually
Okay.
not used in inventory.
Okay.
So try again.
Uh cost and uh damage?
Damage,
Or
okay, okay. Damage is part of the answer. So well, what do you need to do to a damaged good? What do you usually do?
uh repair.
Repair, okay. Okay,
Yeah.
so repair, right? And then you
Yeah.
sell it again, correct? You think you can sell
Yeah.
at the exact same price as before?
No.
Okay.
You have to sell at a lower price.
Yeah. So your selling price less your repair cost equals to net realizable. Do you remember the last word?
The net realizable uh net
NRV. So what is V?
NRV. It's value, net realizable
Value. Yeah,
value.
okay. So I think we need to repeat this a bit more in future lessons, hopefully.
Right.
But yeah, this is basically, I think that's what the question is asking for. You can check the model answer now after we work through it together.
All right. Let's see here. I went overboard. The lower of cost or net realizable value.
Oh, perfect.
Oh yeah.
Yeah. So,
Okay.
so now you kind of know what this question is asking for, right?
Okay. Yeah.
Yeah. All right, let's go on to well, what is the accounting theory which is applied when you are valuing it at the lower of cost and net realizable value?
The prudence theory. My
Prudence.
favorite theory so far, and the only
It's
one
the
I
only one
think.
that you've learned. Yeah. I think that's the correct answer, right? Hopefully.
Yeah, it is.
Okay, what does it mean to you?
To me,
Hmm.
it is to take uh the lowest realizable value of the goods you have. So no matter what, no matter how the market changes,
Mm-hmm.
unless you're able to guarantee that it can uh realize a certain amount,
Mm-hmm.
it is always at uh the lowest possible value.
Mm-hmm. Okay, so that what you just said was the application of prudence, right?
Right.
So what about prudence itself? Right. So if you take out the context from it, what do you
Right.
think it means? Let's say like every day, if you practice it, what will you be doing?
Mm, I'm not sure.
Not sure. Okay.
Yeah.
Prudence. Well, I'll say being cautious.
Uh-huh.
Being slightly pessimistic,
Okay.
and you uh, anticipate and prepare for bad situations rather. So yeah, prepare for like I'll say mm, I wouldn't say the worst case scenario. Uh, but I'll say the worst probable scenario. So you can't prepare for everything, right?
Right.
Because that doesn't make any practical sense. Can you
Right.
imagine someone who is just overprotective of himself? He will never be able to step out his house. He'll never be able to leave like
It's just always in preparation.
yeah. No, he'll always be sheltered. Like literally
Right.
everything from everything. So yeah, you don't want companies to do that, right? Can you imagine?
Yeah.
You can only sell when you have exactly the amount of money to pay. Like the world wouldn't turn the way it is, you know,
Mm.
compared to today, right?
Mm.
Yeah. So that is the casual way of defining it. Of course, the textbook has their own textbook definition. If you're taking the
Mm-hmm.
exam, which you are, go and memorize it. Unfortunately, there's no other way around it. I don't think
Right.
the teachers will accept yeah this sort of answer. But for your own understanding, for you to apply it, you need to well first understand what it is, right? So
Mm-hmm.
best way is in your own words describe what you think it is.
Okay.
Mm, right. Okay. Let's move on to the next question. You
Sure.
have well actual calculation this time.
Yeah.
Not sure if you like it more or less than definitions.
Uh, Honestly, I like it way less than definition. Definition's more fun.
Oh, okay. That's
Yeah.
interesting. I'm quite the opposite. I like calculation way more than definition because my memory bad. Right. Okay. Sure. You want to read the question? What do you think are the important parts?
uh, the first line, 31 March 2019.
Okay.
Xuan's business had an inventory of sofas valued at 12,200.
Okay.
However, Xuan provided the following information about some sofas in the inventory.
Mm.
So below are what happened.
Mhm.
One leather sofa costing $400
Mhm.
has been damaged and could be sold for 375. after repairs costing $50.
Mm-hmm.
And the next thing is that a range of designer sofas is in great demand. There are two of these sofas in inventory. Each sofa costs $250 and cannot be sold for $480.
Mm-hmm.
So
Oops, sorry.
yeah.
Okay. Let me see if I can. Okay, then what about the actual question? What is I think part C? What is part C asking for?
Calculate the value of inventory, which should be included in the balance sheet at 1st March 2019.
Okay. Then what do you think the question is asking you for?
So the question is asking for basically uh the original value 12,200
Mm-hmm.
is before the calculation of the leather sofa, the losses from the leather sofa,
Mm-hmm.
and the increase in demand for the designer sofas.
Okay. This is a little bit of exam technique, so uh, if you want, you can note this down. First thing you do when you see any question, right? You read the
Yeah.
question, you first determine what period you're looking at.
Right.
So the period here it ends at 31st March 2019, right?
Right.
So when does it start?
It starts 1st May.
1st May?
Was it May? March.
One year.
Oh, 1 year. Oh, sorry. 1st March as well, right? Or was it
First
1st Feb?
1st April.
Wait, am I crazy? Oh, it's the month after. Oh my days.
It's okay. It's
The month
okay.
after.
Now you
Month
know,
after March is April. I was like, after March,
right?
May?
Wait, hold on. Give me a second. Hello, Shinzo Lofu. Thank you for the bits. Yes, good evening. I hope the day was well for you. I'm doing a lesson right now, so unfortunately I can't respond as much. But yes, thank you very much. Much appreciated. You have a good evening as well. All right. Okay, I'm back. Sorry about that. Yeah, okay. Right, so this is first step, right?
Right.
Yeah. Okay, then your second step is to ask yourself what answer do you give to the question, right? So like
Right.
something like you could ask yourself, do you give a sentence as your answer? Do you need to give explanation? Uh,
Or equation.
yeah, equation, or just give them a number.
Right.
So what is this question one?
This question wants an equation.
Equation?
Mm-hmm.
Value of inventory, do you think it is just one number or you think it's a full equation? Say I ask
I
you
think
what is the value of your monster can?
okay.
Yeah.
The final answer should land uh in a number,
Yeah,
but they
okay,
do
so
say calculate the value, so I believe they want us to show the working of it.
oh yeah, that
So
is
therefore,
the
equation.
working. That is the working, but the
Right.
answer should just be a number, right?
Right. Okay.
Yeah. So now you kind of know what you're looking for, right? Then the third one,
Mm.
which I already asked you, value of inventory. Again, what was the definition?
Value of inventory.
Mm.
It was the lower of uh the lower value of
Mm-hmm.
cost sales. Uh, sorry, net realizable value. There we go.
Okay. Cost and net realizable value. I'm just gonna write NRV from now on.
Okay.
Yeah. So yeah, you kind of get the idea, right? So let's go back to the question. Okay. So what are the figures given?
12.2K as the original amount, the original value,
Mm-hmm.
and then uh or a couch sorry, a sofa originally costing 400,
Mm-hmm.
only being able to sell at 375 after $50 repair.
Okay.
So the NRV will be uh 400 minus 50, was it?
Is it
Hold
400
up.
minus 50? What is
It's
the price you...
375.
Okay.
375 minus 50.
But why?
Because uh because the value you're able to sell it as
Mm-hmm.
is now lowered. We take the lowest net realizable value
Mm.
and you minus it off with the cost of repairs.
Okay. Gonna be a little nitpicky about the phrasing because
Okay.
if you explain this in exam, you get no marks. The term
Okay.
must be correct. So
Okay.
the selling price after repairs, right? Selling price after repairs minus the cost of repair is your net
Okay.
realizable value.
Oh, okay.
Mm. So in this question, it's very clear, right? So in more complex questions in the exam, they won't be so nice and tell you
Okay.
exact wording. They will
Okay.
just say, "Oh, maybe he can dispose of it for $200, by selling it to
Ooh.
some trash collector or something." Then what is
Okay.
the NRV?
$200.
Okay, what's the repair cost?
0.
Yeah, correct. You're right. Because he didn't get repaired, he just sold it.
Right.
Yeah,
Right.
so
Okay.
but net realizable value?
$200.
Yeah. Yeah, so it's relatively straightforward, right?
Right.
Yeah, so if you break it down step by step, sure it'll take a bit more time, but uh yeah, okay, then what's the lower number here?
The lower number would be 325.
Okay, so you just need to note down in your own like markings how to... I mean, you just need to remind yourself that you need to use that figure instead,
Right.
right? So usually for me, I put like a small tick mark beside it. As long as you're not using red pen, I think you're fine.
Mm-hmm.
Yeah. So usually I will use like, you could even use pencil. That's even better because that way the marker, people marking it will just see, oh yeah, pencil working step.
Right.
Yeah. So if you want, you can use this. You use a tick mark. Use whatever symbol that you feel is more convenient for you.
Okay.
As long as you can, at the end, notice every single point that you picked out for yourself.
Right.
Because in the exams, questions do get very long, right? So you need to have a systematic way of picking out all the information that you need.
Right. Okay.
Okay, so let's
Uh,
move. Yep, go on.
can I say that should if we're gonna take the variables to for the
Mm,
final calculation, right?
mm-hmm.
Wouldn't it be better? Wouldn't it make more sense to have $400 minus the like calculate the difference between the two first? Cause we're calculating a new value of the inventory. So wouldn't it be better to just take 12,200 minus off the difference of the numbers instead of the lower values?
Mm, if it's only one criteria, like one note, sure. But because here
Right.
you have two things that you calculate first, right? You calculate the small one first, then you go do the bigger one.
Okay.
So you do the parts first, then you
Right.
do the whole,
Okay.
right?
Okay.
Not sure what good analogy it is, but say you're
No,
bidding.
it's
Yeah.
alright. Yeah,
Okay.
it's alright.
All right. Then okay, let's go with note 2. What do you think it's telling you?
Uh, that the original price,
Mm-hmm.
that could be sold for higher, like the value of the inventory has went up.
Mm. Let's be systematic here. What is the cost?
The cost was 250. Cost of sales was 250.
250. Sorry. Don't use cost of sales yet because you haven't sold
Oh,
anything.
right. Okay, the cost is
Yep.
250.
Cost is 250. Correct. Okay. Then, what is your NRV here?
480.
Yeah. Any repair cost?
No repair cost.
Yep. Okay. Then, well, what is the value of note 2?
Uh, Note 2 would be 480 times 2. Because
480
there's two
times 2?
sofas.
can you go through the criteria of the value again?
Oh, the lowest net realizable
Mm-hmm.
value.
Mm-hmm. Mm-hmm.
Okay.
So
So evaluate at the cost.
yeah.
So still value it as the value doesn't change.
Let's tweak the explanation a bit. Your cost is 250. Your net
Yeah.
realizable value is 480.
Right.
250 is lower than 480. Therefore, use 250.
Right.
Yeah. So that's like the foolproof way you can talk yourself into
Okay.
yeah, choosing the correct option, hopefully. I don't know if this works for you. To me it works if I just verbalize it to myself.
Okay.
Yeah. So
So
yeah.
this equation doesn't change anything from the 1200 then. 1202K.
Not yet, because 1200 uh 12,200, right?
Mm-hmm.
Is the total.
Right.
And the total is affected by its parts.
Right.
So if the parts are affected, then your total will be affected.
Okay. Let's say the first part N1 is not
Mm,
did not happen.
mm,
So in this case we only have N2.
mm-hmm.
Uh doesn't this just mean that N2 is redundant cause we are keeping the value the same anyways
Mm.
as the cost.
Yeah, that's a very good observation. In exam questions and in like real life, we call this a red herring. What
Why?
this means is it's useless information that you still have to sort through because it might be important, but ultimately doesn't affect your end result at all.
Okay.
Yeah.
Okay.
But if you don't sort through it, you run the risk of actually missing important
Right.
information.
Right.
Yeah.
Okay.
And if you fall for this trap, like just now you kind of did by saying
Right.
480 is now the value, right?
Right. I did. I did.
Yes, yes. So then you actually fell for the trap. Yeah. So this sort of things is what they call tricks, in
Right.
exams, tricky. Because let me just tell you, accountancy, once you know like all of the rules, it is pretty straightforward, but the difficulty lies in sorting through all the information for things that you need. It's like you have a toolbox that has all the tools in the world in it, but you only need one of them, and it has to be a
Right.
specific size.
Okay.
Yeah, so you gotta sort through all of that, and that takes time. So usually the issue with accountancy papers is not cause you can't solve the question, but because you just don't have enough time.
That's a race against time.
Yes, it is a race against
Okay.
time and against yourself to make as
Right.
little careless mistakes as possible.
Oh boy.
Mm.
Okay.
So the only way to improve on both is do more questions.
Yeah.
And also review them. So you look at the answer, you see that you got it wrong. If you
Mm-hmm.
can't figure it out yourself, ask a teacher, you know.
Mm.
Uh
Okay.
or you could ask me. If I don't give you a satisfactory answer, you can ask someone else.
Mm-hmm. Okay.
Yeah, but mm, essentially, yeah, this is how you can learn accounting.
All right.
Yeah. Okay. So you've pointed out that Note 2 doesn't have any effect, right?
Mm-hmm.
So what about Note 1? Does it have an effect?
Yep.
Yes. So what is the effect? Now you can do this, right? So
Right.
your answer, I'm just gonna put ANS equals to
Uh 12.2K minus 75. The difference between the old cost and the new cost.
right. So I mean I'm gonna write out the full working step here.
Mhm.
What you do is you take out the incorrect cost, right? You take out the incorrect number, which is this one,
Okay.
minus 400. Then you put in the correct number.
Okay.
Yeah. So yes, I understand you lumped it together like
Yeah, I did.
this, right? Answer will be the same, but sometimes
Yeah.
I mean for me at least,
Right.
if I go through like this more complicated working steps, I just get lost. So I just write
Okay.
everything out and then just punch the calculator real quick to get the correct answer. But yes,
Alright.
your uh your answer is correct. Your method mark will also be given fully, even if you write minus 75.
Right.
Yeah. So, alright, then that gives you 12125.
Mhm.
If I'm not wrong. So, I mean, this is a bit, we skipped kind of ahead, but basically, like, I put one tick, right? When you used it up, you can put two ticks beside the information that you have identified. That's the first tick, and use the second tick.
Okay.
That is how I worked. How I do my workings. Like I check, make sure I've used everything that is important to me.
Okay.
So depends on person. You could use this method, but if you think it's confusing because it looks like the same like end of answer kind of tick mark, you can use another symbol. As long as you don't use red pen, I think you're fine.
Okay.
Okay. So far any questions?
Nope.
No? Anything you want to clarify?
Nope, I'm good.
Okay. So now that the information is gone, how do you value inventory?
Uh, you value it at the lower end of cost
Mm-hmm.
or net realizable value.
What is net realizable value?
Uh, sales cost of sales minus cost of repair.
Cost of sales? Have you made
Sorry,
a
not
sale
cost
yet?
sales minus
Mm-hmm.
cost of repair.
Selling
Selling value.
and
Sellable value.
what selling price? Is it the one before or after the whatever happened to it?
After.
Okay. Yeah. So sometimes the selling price afterwards could be higher than before.
Mm-hmm.
And sometimes that's where the trick is.
Okay.
Because even if it's higher, right, sometimes the cost of repair brings it down still lower than the cost.
Right.
Yeah. So that is one of the tricks I've seen before. I'll just let you know right now that it exists. So
Okay.
just be mentally prepared. They are willing to throw anything at you.
Well.
Yep. So alright. Yeah, the men decided to value inventory at original cost. Right?
Right.
Okay, so what does this mean for gross profit? So what is gross profit first?
Gross profit is sales revenue minus cost of sales. I
Sales
believe.
revenue minus cost of sales. Okay. Right. So again, if you only value inventory at the original cost, right?
Mm-hmm.
Does your sales revenue actually change?
No.
No. Okay. Let me look at the question very carefully here. Okay. So you said that there is no change for sales revenue, right?
Right.
What about your cost of sales?
There was changes.
What was the change?
Uh, the leather sofa that got damaged.
Mm-hmm. But let's look back at the question again.
Right.
Did the person actually
Designer.
sell that?
Oh no, they didn't. Okay.
Yeah. So did cost of sales change?
No.
I could be wrong here, but effect
No changes.
this triangle means change, okay?
Okay.
No change. Okay, what about profit for the year? Okay, let's split this up. What about profit for the year? Do you think that changed?
No.
So what is profit for the year?
I don't know how to define it.
Okay. Well, okay. Do you have your financial statement or statement of financial performance with you?
Statement of financial performance.
You call it the income statement, you can call it the statement of profit or loss. But now apparently O level wants to call it statement of financial performance. So
I do not.
you do not? Okay. Let me see if I have it on my side. So hold on a minute. Let me just dig through my files real quick. Oh, where did I store it? Did I actually download it? Oh, well, I might be an idiot and didn't download it. Okay. Okay, so there are two ways to explain this. Do you want the shorter explanation or do you want the longer explanation?
The shorter explanation.
Shorter explanation?
Yeah.
That's the shorter explanation.
Okay.
Okay. Let's break it down, okay? Gross profit, you know, right?
Mm-hmm.
So what is gross profit?
12.2K. Sales revenue minus cost of sales.
Okay. And then other expenses. Why do you think I put other inside?
Because there could be a wide list of things.
Okay. But why can't I just write minus expenses?
Honestly, I'm not sure.
You're not sure?
Yeah.
Okay, what does other imply? Like if I just say profit for the year is gross profit minus other expenses. So what does this other actually imply?
Things other than inventory, cost of inventory.
Cost of inventory, cost of sales. So I'm implying that cost of sales is actually an expense.
Right.
So this is actually something that people kind of gloss over because they are not put together, right? Cost of sales and other expenses, they are not put together. But in essence, they're actually the same thing.
Okay.
Like their nature is the same, where it basically represents. Okay, so this goes back to the definition of what is an expense and what is a income or revenue, depending on what you want to call it. Both of these, right? It means it is a process. So it's a process that process of inflow or outflow of assets or liabilities. So this is a bit of English. Unfortunately, you can't run away from it. So what do you think an expense is?
Expense is outflow of asset.
Okay,
Liability.
and or
Or
because I mean I wrote assets or liabilities, right? So what
right.
about liabilities?
Sorry, I don't get what you're trying to ask for. Like,
Oh, you said expense is an outflow of assets, right?
assets or liabilities.
Or liabilities?
Is it?
Is asset and liability the same thing?
Oh no, sorry. It's an outflow of asset and an inflow of liability.
Okay, then what about revenue?
Its revenue is unchanged.
Unchanged. So what does that mean? Okay, what is revenue to expense?
Revenue is honestly I don't know. I don't know.
Okay, then what is liability to an asset?
Credit.
Ah, okay. If you want to use that, then asset is debit, right?
Yeah.
They are opposites.
Okay.
They're
So
opposites.
okay.
Yeah.
Okay. So that's okay. Okay.
Unfortunately, it's a bit open-ended, so it could be a lot of
Yeah.
things, but
Yeah.
uh,
I was gaslighting
yeah.
myself the entire time. What could it be?
No. You need to say what you are thinking.
Hmm.
That way, if you correct your base understanding, your thoughts, then you can think in the correct manner in terms of accounting. And that
Okay.
is honestly the strongest foundation you could actually lay for yourself.
Okay.
So like, right, so they're opposites, right? So then now knowing that revenue is opposite of expense, what does it mean in the form of inflow and outflow?
Revenue is an opposite of expense.
Mm-hmm.
Uh, what does it mean by inflow and outflow? Uh, in
Yeah.
shit.
Oh, okay, good. Let's go back to expense, right? You did say
Right.
it before. So what is expense?
The expense is a credit.
Is it a credit?
It's a liability. Is I believe so.
What is
Expense
it an
is money
inflow?
flowing
What is it
out.
an inflow of?
It's an inflow of liabilities
Mm-hmm. And
and an outflow of expense.
okay. So when it comes to definition, right, try not to bring in debit or credit.
Okay.
Because debit credit comes after you define what it is.
Oh, okay.
Then now knowing that what is expense, so what is revenue?
Revenue is an inflow of assets
Mm-hmm. Or
or an outflow of liabilities.
okay. Then now you know that, right? I mean, it's more of a revision
Right.
because this is a kind of like lesson one material. But let's go back to this, right? So
Right.
when you calculate profit for the year, what you do is you take revenue, right? Then you minus off your cost of sales, you get your gross profit, then minus off your other expenses, then you get your profit for the year.
Right.
I'm just gonna call it. They call it net profit, to be honest, but
Okay.
they want you to say the full thing, I guess. Profit for the year, because net profit could mean different things.
Right.
Yeah.
Okay.
So I'm just using net profit because it's easier to write. But again, for your
Right. No worries.
exams, follow the question. The question says something, you just follow that.
Right.
Yeah. Okay. Then now you see this chart, right? Let's go
Right.
back to what changed. So what changed? Did revenue change?
Revenue did not change.
Okay. What about your cost of sales? Did it change?
Cost of sales also did not change.
Okay. Then what about your other expenses? Did it change?
Other expenses, uh, they costed $50.
Did it?
Cost of repairs.
Cost of repairs. But did you already count the $50?
Oh yeah. Uh, did we?
I mean,
No,
you
not for
decided
the
to use
12
the
month.
original cost, right?
Yeah.
Okay.
So no. So it's not counted for yet.
Okay. So this is actually rather confusing. I will admit.
It is.
It's actually technically a coin flip.
Oh, okay.
It is a coin flip because the phrasing of the question is rather ambiguous.
Mhm.
Because you could always argue, yeah, he did spend $50. He just didn't like recognize it as a cost of sales because he didn't take up that final figure.
Right.
But then again, he didn't sell anything. Right?
Right.
Yeah.
Could it be
So
that he has repaired it, but he just didn't sell? So the cost of repair is there, but he just didn't sell it.
Yeah.
So it. Okay, never mind. I've lost my train of thought.
I mean, he has incurred it, right?
Yeah, he's incurred the cost of repairs.
Yes. So, well, there are two scenarios that branch out from here, like two timelines. One is you recognize it in your other expense this year, and then you have to, well, reverse it out and all that stuff and put it back into cost of sales whenever you sell it. Right? The other method is just to acknowledge that it happened, but not in the books because you didn't sell it yet.
Okay.
Especially when he already said he's not going to record it as an inventory. So chances are it's a 50-50 between the two.
Okay.
And unfortunately, in exams, you can't just ask the invigilator, hey, which scenario it is. Yeah, unfortunately, the world doesn't work this way, right? So, my best advice, follow your gut. And don't overthink because you waste time.
Then I guess we'll just go with the one where he didn't account for it. He just left it as is.
Okay. Then, in that case, the other expense change?
No.
No. Okay, then did net profit change?
Then no.
Okay, then now you can check your answer, see if you won your coin flip.
We love gambling. Who knew you could gamble on your O levels?
Oh my goodness.
Who would have thought? Let's see.
Right.
I was wrong. It was overstated by $75. So it is assumed that he sold it.
Ah, okay. Well then, I guess we both lost the coin flip.
Yeah.
Alright. Well, I guess that's fine.
Oh, they really could have phrased it better. It's like, and could be sold for $375. But it was sold for $375. Oh my days.
No,
It's
it
so
could
annoying.
be and it was sold is very different. Yes, I agree. So yeah,
Oh my days.
I wouldn't be able to get full marks either.
I mean, technically, if you think about it, we could have applied prudence theory and just took it as he accounted for it.
Well, okay, then you're conflict. Then you have a conflict with another theory. Do you want to learn that one right now or later?
Yes, please. Yes, please. It'll be fun. No.
Okay, these are not theories, these are principles. The next one is
principle.
matching. What does this mean? What does match? What are you trying to match here?
Match.
Say when you make a sale, what are you trying to match here?
Match the cost.
Cost and
expense. No, it's not cost. The cost and revenue, I think.
selling price, right?
Selling price, yeah.
In that sense, so what is cost? We went through this just now. Cost of sales. What is it? Is it an asset, a liability, an equity, revenue, or expense?
Cost is an expense.
Expense. Why?
It's an outflow of asset.
Okay, it describes an outflow of an asset. It's a process by itself.
Right.
Okay. Then what about selling price? What do you think it is?
Selling price is inflow of asset. It is money come in.
So under those 5 categories, what can you classify it as?
What was the 5 again?
Okay, so asset, liability, equity, or I like to call it not liability.
Okay.
Actually, you know what? Let's leave equity to the last one. Then you have the processes, which is expense, right? And then you have revenue, and then you finally have equity, which is none of the above.
Okay. I believe selling price is considered under revenue.
Okay, yeah, and you're correct.
Okay.
So you're trying to match revenue to expense, or expense to revenue. Usually it's the other way around. We're trying to match a lower number to a higher number, so you don't end up with a negative number.
Right.
Yeah. So this is what matching principle means, right? So if you apply what we said earlier and just be prudent and recognize it, if you didn't sell it, do you think you can match the expense to it?
No.
No. Why? In
Because
your own
there's
words.
no revenue.
Okay. You can't have cost of sale if you didn't have the sale.
Right.
right? Yeah. So this is basically what matching means. You can't have that thing if you didn't make it, like if you didn't do anything.
Right.
Yeah.
It's not real. It's technically not realized. No.
Okay. Realized is a very specific
It's
word that you
okay.
shouldn't
Okay.
throw around this much. But if you
Okay.
want to use it for your own understanding, sure. It hasn't happened yet, right?
Right.
Yeah. And sales usually are too spontaneous for us to say, yeah, there's a probability of sale,
Mm-hmm.
right? So usually we don't have to make estimates for it. So this one will be taught in later lessons.
Okay.
But yeah, I mean, this is another principle,
Okay.
matching. So sometimes matching and prudence can actually have conflict. Actually, some of these principles, if you use too much of one, it will directly clash with the other.
Okay.
So I mean, now you know two, right?
Yes. I
Okay.
know too.
Then all right, we still have one small part at the end.
Right.
Current asset as at 31st March 2019.
Right.
Now that you know that the question is asking if things are overvalued or undervalued, I mean we could go back and try out everything else. Do you want to go back and see what the
I think this is uh pretty straightforward.
Mm-hmm.
Because at the end of every uh only the only variable that changed was the couch that was only sold at 375 after repairs. So all in all, I believe that the value change will be affected as current asset. So it's just
Okay.
yeah.
It actually just dawned on me what kind of question this is. So this is
Right.
actually an expectation versus reality question.
Right.
So what would you have expected him to do? Who's this person? Xuan. Let's call him
Xuan.
X. What do you
Yeah.
what do you expect X to do? What was the right thing that he should have done?
He should have followed made changes to
Mm-hmm.
the value of his inventory.
Okay,
Oh yeah.
so what would that mean for number one, his gross profit? So again, let's write out the equation of the gross profit here. Oh, what happened? Profit equals to, so what is gross profit?
Gross profit is sales revenue minus cost of sales.
Okay, then what was the expectation here?
The expectation was the cost of sales went down.
Went down. Let's see.
Yes.
Yeah. Okay. Then what about the sales revenue?
Sales revenue also went down because it can only be sold for lesser.
Okay, then that makes things a bit complicated, right? So you need to see
Right.
which went down more. So which went down more?
Cost of sales went down more
By how much?
by 75.
Okay, then what about sales revenue?
Sales revenue went down by 25.
How do you get those two numbers?
400, which
Mm-hmm.
was the original sellable price of
Mm-hmm.
the sofa, can now only be sold for 75. So the difference between those two, the old sellable value and the new sellable value, will be 25.
Right. Yeah, so you got it spot on. Okay, then cost of sales we calculated just now. So what is the net
Right.
impact on your gross profit?
We take the larger decrease, so 75.
Is it?
Right? Is it? Or is it negative 100?
Let's see. You have a, let's say gross profit is X that remain.
Right.
It can be any number, right?
Right.
Does this make it clearer?
Okay.
So what is the net impact?
Neg. Oh, negative 20. Alright. Was it negative? Right. No, negative 50.
Negative 50?
Or was it
What is
negative?
what is negative times negative?
Negative time plus. So it's 50.
So it actually rose by 50. Your gross profit rose by 50.
Mm.
Oh. Why did I not select the eraser? Give me. Okay. So surprisingly, your gross profit actually increased by 50. So why? If you want to use your own words, why did your gross profit actually increase instead?
Because you still earned money. You earn less money, but you still earned a profit nonetheless. It's like the cost it took to sell was already sorry. The cost that it took to sell it was already lower than your the amount you sold. And since your sales revenue is already like sort of a profit, earning less doesn't mean you don't earn at all. I don't know if that makes sense. It's like
right. So
that you
if it doesn't
sold
make sense, something went wrong, right?
Right.
So what actually went wrong? Let's check each component, okay?
Right.
Did your sales revenue actually decrease?
No. Did it? This one I'm really not sure. I'm so lost. I'm so
Okay.
lost about this.
Yeah, this is a tricky one, isn't it? So
Yeah.
I think
Are
the
you
only
also kind
wrong
of
part is
lost?
your cost of sales.
Is it?
What was your repair cost again?
Repair cost was 50.
Right. It was 50, right?
Yeah.
Cost of sales means in order to make this sales, what cost did I incur?
What cost did you incur? Okay.
So apart from buying the item, you need to fix the item. So you add those two together.
Right.
Yeah. So now, what do you think the gross profit impact is?
The impact is minus 75.
Does this make sense now?
Okay, yeah, no, this makes more sense.
Yeah. So yeah, accounting is quite logic based as well. You feel something is wrong, then something's probably wrong.
Oh my god. Like I've been bamboozled.
Yeah.
I've been bamboozled by the questions.
So okay. Then you would expect gross profit to be lower, right? But what did he actually do?
He didn't change.
It
He
didn't
made no
change.
changes.
So it should be minus 75, right?
Right.
But it isn't. So do you think it is overstated or understated?
It's overstated.
This is also a tricky part. But do you want to explain why you came to the conclusion that it's overstated?
Well, but this because the value he stated it as was more than it should be. So it's overstated. If it's understated, it'll be less than what it should be.
Okay, yeah, perfect answer. And perfect reasoning. That's the most important part. Your final answer is not as important as your reasoning, because as you go higher level, sometimes they don't give you an answer.
Wait, what?
You can ask your friend who's studying in uni right now.
Okay.
ask them, do they get answers to their questions?
Very well.
You can ask them. All right, let's go on to part 2. So this is part 1, right? D part 1. Okay,
Right.
then now we've got the clear steps to follow. What about part 2? What should it be? First of all, what is the definition? What is profit for the year?
Profit for the year.
Mm.
Profit for the year should be what was it?
You can use the shorter form of it. I mean, you did point it out just now.
Right. I'm trying to think back. Oh my god, I fucking remember for Goldfish.
It's okay. Take your time. It's good to struggle through it now than to struggle through in your exams.
It's gross profit minus other expense.
Hmm. Yeah.
The worst part was I wrote it down. It was right in front of me. I wrote it down, and it was right in front of me, and I overlooked it.
It's okay. Yeah. Right. Okay. Then, well, let's go through the process again. Right. What happened to gross profit? Should it be lower or should it be higher?
Gross profit should be lower.
It should be lower. What about your other expenses? Should it be lower or should it be higher?
Other expenses
Mhm.
remains unchanged.
Okay. Good. You didn't fall for the trap. And then, therefore, net profit should be lower or should be higher?
It should be lower.
Okay. Then, well, is it overstated or understated?
Overstated.
Right. And then this, yeah, by how much you already got it, right?
Right.
Okay. Then, finally, current assets. What does current
Right.
asset mean to you?
Current asset is, well, asset that you currently have. So things that you currently have that can reel in money in short term.
Okay. Well, part correct.
Okay.
You did state a good keyword, but at the front you didn't state anything. In fact, I think you stated the
Right.
wrong thing.
Okay.
Current asset is the word current, right?
Yeah.
It could mean two things, but in accounting it usually just means one. Short term.
Right.
So things that changes rapidly, things that you would expect to turn into something else in a short period of time. So what's your
Right.
understanding of short term?
It's there for now, but it won't always be there.
But if you're doing accounting, you cannot just say that, right?
Right.
So in terms of time frame, how long do you think short term means?
Within the month.
Within a month. Okay. Less than 1 month. In some scenarios, for some like assets, you can argue yes, less than 1 month is short term.
Right.
In general, it is less than a year. Generally. Why I say that is because, again, this is very much based on judgment. But because, again, we want to standardize our language in accountancy, we usually say 1 year. Right.
Okay.
So I think at your level, it is safe to assume 1 year.
Alright.
Just assume. They won't tell you anyways.
Fair enough.
Okay, then second question. Now that you know what current is, what is current asset?
Current asset.
Or like you could list out a bunch of things that could be your current asset. things that you might have right now,
Kindness.
but you're probably gonna have to, use it up or throw it away, and it's like something will happen
Well,
to it in the short
you're
run.
right. The most relevant one, I guess, would just be inventory. I don't know if can be considered asset, but inventory would be the most relevant one.
Yeah, you're correct. What else?
Uh,
Something you use every day.
the money, capital, I
Cash.
think. Cash,
Money.
yeah.
Yeah, you got it right the first time.
Okay. Yeah.
Capital is, remember,
Different.
not
Okay.
not an asset.
Right. Okay. It's an equity.
Yes. Okay. What else? The other most used one.
The other most used one.
Something that you were on the other end of instead for quite a while.
Uh.
A hint, can I get a loan?
Uh. A liability.
That is a
No,
liability. What's the
right.
opposite of can I get a loan?
Trade receivable.
Yeah. I'm gonna call it TR.
Right.
Trade receivable or accounts receivable. For now it can be interchangeable for you. But
Right.
I think I'm not sure in your syllabus if it's called trade receivable or accounts receivable.
Okay.
But yeah, these are like the three biggest ones.
Alright.
Cash can be split into two sub accounts, but I'll go through that in a future video.
Right.
Okay, then now that you know these three, were there anything else in the question that stated anything else? Like, did the question state anything else that?
No.
Okay, so then what do you actually have? Do you have cash? Did the question state anything about cash?
No, we don't have cash nor trade receivable, so we only have inventory.
Yeah. Okay, then.
And since the value of inventory has dropped, I would say it's down by $75.
It's down by 75. Yeah.
So the statement would be overstated by 75.
Okay. And that's your answer, right?
Yeah.
Let's do one more step. Let's link it to the accounting equation real quick. A
Okay.
equals to liability plus equity.
Right.
Right? How do you check that you've done everything correctly? First of all, let's go to the very first one. Gross profit. Gross profit give rise to your net profit. So let's start with net profit.
Right.
Where do you think net profit lies?
Net profit lies under equity.
Okay, why?
Because it's not a liability.
Mhm.
No. Because it's inflow. It's an inflow of assets. Or I genuinely cannot define it.
Okay.
But,
let's
yeah,
just say
equity.
let's go back to the definition side, right? When you earn a
Right.
profit, are you liable to anyone else?
No.
Right. And can you use the profit for future inflows?
Yes.
Profit, not like things like cash and things like inventory.
Can you not?
The word profit has a very specific meaning, right? It's just processes. If you look at the entire thing,
Oh.
can you use a
Okay.
process to,
Okay. Interesting. You have to process the process in order to use it, don't you?
Not
of.
really. The process gave rise to something, but the process itself isn't something. Hmm.
Okay.
It's like saying an adjective and a noun, right?
Right.
If your English is
Yeah. You have to put the adjective in front of the noun.
yes, can the adjective usually like actually exist without a noun?
No. You can't be just doing. You have to be doing something.
That's a verb.
Okay. You get what I mean? It's
yes,
like,
of course,
yeah.
but yes.
My English is not that good, but I get the gist of it.
Okay, yeah. So like, say for example, the word red, right? Can you just say red on its own instead of, like, it's usually a descriptor, right?
Yeah.
You can't just say red and then that's it and just stop there and expect people to understand what you mean, unless you point,
No,
which gives
I think a
context.
better I think a better explanation would be round. A
Yeah.
better like analogy. Red is like it can be the color red. It could be a noun.
Oh, okay, sure. Then, well, I mean, different analogies would work for different
Right.
people. Yeah.
Okay. Fair enough.
So, then let's go back, right? Can you use an adjective with on its own?
No, you can't.
But you can use it to describe something, right?
Right.
Yeah. So that's essentially what revenue and expense is. It's used to describe what happened.
Okay.
So for example, you say, oh no, I need to buy lunch, right?
Right.
And you immediately eat the lunch. So that's a process, right? You need the lunch to
Right.
stay alive. It's a living process.
Right.
Okay? Just follow me for a bit, right? So what
Right.
did you do to get lunch?
Spends money
Yes, you threw money at
at the vendor.
yeah, and then the vendor give you lunch, threw lunch at you, which you immediately consume. So do you still have your lunch? Like if you ate your lunch, do you
No.
still have it with
No,
you?
you don't.
Yeah. So in a way, you say that in a process of getting lunch for myself, I spend money.
Right.
So um, buying is the word here. Process, right? Buying
Right.
something doesn't exactly matter, but buying anything involves spending of cash, right? That's English kind of.
Right.
Yeah. So, but on its own, can you just use the word buying?
No, you can't.
Yeah. So, can you also say, I used buying to earn more profits in the future, like to earn more cash in the future? Okay, maybe I
Sorry.
lost you somewhere.
Yeah.
right.
That's
Okay,
the
let's
last
let's
one.
just go back. Let's just backtrack a bit, right?
Right.
Which part do you understand up to?
I understood the point where uh profit being a process
Mm-hmm.
does not directly equals to usable cash. So you can't
Mm-hmm.
directly use the amount gained as cash as an asset.
Okay, tell me what you understand by an asset. What do you think? Like, what are the two criterias it has before you can call something an asset?
Uh, something that directly you can make money off of. So
Mm-hmm.
so a product that you can sell, something that you directly sell and make money that you can
Mm-hmm.
use in the process to to profit. And another is like things like machinery stuff to help you uh stuff to help you get like manufacture stuff,
Mm-hmm.
like stuff to help you make just in general just make money in the direction where it makes you money.
Makes you money now or
Yeah.
later on?
Now.
Now?
Uh, I
Is it
mean,
now?
current asset, yes, now. But asset in general, I think it can be both ways
So the safer definition would just be
now.
in the future, because you cover all assets.
Right. Okay.
And future could just mean 1 nanosecond later,
Right.
right?
In the foreseeable future.
Just in the future or anything.
Yeah.
Yeah. Just you get the
Eh,
gist of it, right?
right. I
Yeah.
get it.
I'd say probably get money back. Probably get some benefits, right?
Yeah.
Like it could be anything. All right, then what about the second criteria? Uh, can you suddenly have an asset pop out of nowhere?
No.
Right. So it's what we call it has a backstory, history, just a story, all this stuff. Which one would you prefer?
It has a process. No.
A process.
Yeah. Like you have to go through it has to come in somehow, somewhere. So
Okay, so they come from
Yeah.
somewhere somehow.
Yeah.
Okay. Yeah. Come from somewhere somehow. Okay, and then liability. The second criteria is the same, but the first one is just the opposite.
Okay, it loses you money.
Yeah.
Is it?
Yeah,
Okay.
yeah, correct. It will lose you money.
Okay.
Then equity is
Just not liability.
none of the above. So you can't throw it into these two, you just throw into equity.
Right.
So let's go back
Okay.
to it. A process. Can you say your process came from somewhere somehow?
No.
Right. Well, I mean some people might argue maybe
But I digress.
yeah. Then what about the first one? A process in the future can get you some benefits. When the
Right.
process is describing right now or what has happened in the past.
So what do you mean?
Okay, when you talk about say something that happened, right?
Hmm?
So for example, you say I bought lunch today.
Right.
The word bought is, describing an action, right? I mean, it is an
Right.
action,
Right.
right? But does it fulfill criteria 1 in any way?
No.
I bought lunch today. Do you think it fits anywhere in the first definition?
No,
I mean, first part.
it's in the past tense, so
Yeah, exactly. So
it has happened.
yeah. So when things happen, for example, like yeah, cost of sales. Your favorite expense for
Right.
now,
Right.
because it's the only one you've learned.
Right.
Cost of sales, right? What does this actually mean? Have you already made the sale?
No.
Are you sure?
Have you? No. It has. It has made the sale.
Yeah. Sale occurred, right? Did your inventory leave you already?
Yes.
Yeah, and so is this referring to no more inventory? Does this refer to a past event or a future event?
A past event.
Right. So it doesn't fulfill criteria 1 in any way, shape, or
Right.
form. But the criteria 2 it fits perfectly, right?
Right.
Yeah, it's used to describe the somewhere somehow.
Right.
Yeah. So I think this is the how, basically. Your process is the how.
So this is under liability.
Is it under liability?
Is it?
Remember what is liability needs to have both as well,
Oh, right. It needs to lose your money.
Mm-hmm.
Okay.
So you just throw it into equity.
Okay.
So you don't want to deal with it anymore, just throw it into equity.
Okay.
Yeah. So now we can link it, right? Inventory decreased by 75. Inventory is what again?
Inventory is an asset.
Yes, it's an asset. So minus 75. And your cost of sales or it flowed down all the way, right? Your cost of sales and your revenue all changed.
Right.
What was the net impact on your net profit?
That impact was minus 75.
Okay. Now you have a 75 and you have a minus. Do you think
Right.
it decreased your equity or it increased your equity?
It decreased
Why?
because it's lost in value.
Mm-hmm.
It's a lost failure. So
And
it's
how
a
do you?
decrease.
What other way you can check for sure that you've lost?
There's other ways you can check.
You look at the equation itself. If you know nothing, but you know that equity
Right.
has changed, but you do know that
Right.
your asset decreased by 75. So what was the change?
Liability.
Is it liability? No, as in the criteria was asset decreased by 75 and
Right.
equity has changed by a certain amount.
Right.
So what was the change in equity here?
The change in equity. Uh.
If one
It
side
was
minus 75, how do you make sure that the net is still zero?
increase in liability.
Increase in liability. Oh, all right. Let's run through this.
Yeah.
See what happens here. Minus 75 equals to, you say increase in liability.
Right.
Plus, let's just call E X. That doesn't change.
Right.
Is X 0 here?
Uh. X is. Uh. Oh my god. My brain.
Okay.
So I'm okay. I'm kind of lost, and I'm gonna be honest. I've also lost where I went lost. I've been trying.
Okay,
It's
okay.
like I'm piecing together everything, trying.
Have you heard of equal and opposite reaction?
Right.
Anything on the other side of the equal sign is an equal and opposite. Well, let's see. Maybe that's not the great way to say it.
Are we trying
Let's
to
go
apply
back.
matching here? Are we trying to match things?
No, this is not
No,
matching
right?
principle.
Okay.
This is math.
Okay.
Unfortunately, this is math, right?
Okay.
When you know that something increased, oh whoops, let's see, increased by 75, right?
Mm-hmm.
What would you need to do on the other side?
Also increase it by 75.
Yeah. So say you only have a number, right? If
Right.
one side increased, the other side will have somewhere that increased.
Okay.
The other scenarios will actually just be your asset increase 75, your liability increase 75, equity remain unchanged.
Okay.
Okay. You also have one more where your asset increased by 75. Your liability and equity both didn't change. And then somewhere in your other asset you decrease by 75. So the net effect is still zero. You can't have a random liability or a random asset appear out of nowhere for no reason.
Okay.
Mm.
Just like it can't disappear for it goes the other way, so it can't disappear for no reason either.
Mm-mm. And the way we keep this in balance is using debit credit. Because those
Okay.
two work in pairs, right? At least.
Right.
And both sides need to be the same number.
Right.
So okay, this is hard to grasp. So it's okay to not understand this, but
Okay.
it's also very crucial to understand this. Because that's literally like the first thing you learn in accounting, to be honest.
Okay.
uh Hello Mania. Wait. AI viewer stream boo. Aw. I have no idea what that means. Well, if you are watching this, welcome. I just hope you learn something from this, because well, these streams are just meant to be educational. And frankly, I don't even know who my viewers are. I don't have the numbers out on my screen.
I'm currently viewing the stream.
Oh,
I have
you
the
are?
stream running.
Ah, okay.
Yeah.
Yeah, so I have no idea. Was this meant to be an accusation, or is this meant to be a promotion of some website? I don't know, but it's fine. It's the grand scheme of things doesn't matter here. Alright, cause I didn't turn on. Oh well. never mind. Right, back to it, right?
Right.
This accounting equation is something that you learn very early on,
Right.
and all of your future knowledge actually builds onto this one thing.
So this is like one of the base, the first building blocks to
It
ever
is
like
the
do
backbone.
improvement. Okay.
So again, it is the backbone, but at the same time, it is also the hardest to understand, right?
I see.
So it is perfectly fine to not understand this, right?
Mhm.
What I can only say is take your time, right? And try to think of this accounting equation when you do your questions. So you want to run through a scenario, or you want to just stop for the night?
Let's start for that.
You want to stop for the night? Okay, sure.
Yeah. Cause
Then before
here's the
you
thing,
go,
right?
what did you learn today?
Before we get to that, can I say something?
Yeah.
For this question, part 3I, right?
Mm.
What was the answer we came down to?
Part 3.
3I.
Part 3I. Which one is it?
Oh, sorry, DI. DI.
Oh, DI. We said that gross profit was overstated by 75.
On my answer sheet, unfortunately, it says it is said no effect.
No effect.
Right.
Let's see.
Is it cause that the 75 is actually not under actually considered other expenses, so it doesn't affect the gross profit?
Did net profit
Cause
change?
Hmm?
Was net profit overstated?
Net profit was overstated. Yes.
Okay.
So the 75 decrease will be used in the equation for net profit of the year instead of gross profit.
Okay. Then I guess it makes sense as well. I guess what the examiners was trying to tell us was that your cost of sales, right,
Mhm.
didn't change. No change because you didn't make the sale. So like, I guess the word could be still means that sale did not occur.
Okay.
Yeah. So, I guess we misunderstood it again, huh? Both of us.
Right.
It's fine. It's fine.
But
Yeah.
the profit of the year did decrease, so
Mm.
the
But
net realizable value also like technically did decrease.
yeah, because that is unchangeable. That's an
Right.
unchangeable fact.
Right.
And you already know that 75 was taken away. So in order to balance this equation, you take away 75 from here. Because you didn't incur a liability, right?
Right.
Yeah. So,
Okay.
right. Yeah, so it's a bit confusing. Yes.
So
And
back to the equation, profit for the year, gross profit minus other expenses. Can we consider the 75 as other expenses in this situation?
yeah, if gross profit didn't change and net profit did, then somewhere in between the two, something changed.
Okay.
Yeah. If I would hazard a guess, it will probably repair expenses or something.
It was the $75 is the 375 minus cost of repairs, which is 50. That sorry. It was the difference between the original net realizable value of the sofa
Uh-huh.
and the new one. The
Also
older the new
cost
one.
minus the NRV.
Yeah.
Interesting. Then it's quite clear why it is. Impairment loss. Yeah.
Okay.
Yeah. So it is immediately recognize the impairment loss.
Okay.
instead. So, impairment loss is tricky because depending on who you learn from, some of them would say it's under other expenses. Some of them would
Right.
lump it under cost of sales. Some of them also lump it like just subtract it from cost of sales directly instead of like even writing it out.
Okay.
So I'm not sure if the syllabus give you a what's that called? Gave you a actual state. I think it did. I saw it somewhere. Could you give me maybe like 3 minutes? I'll bring it up.
Sure.
Yeah, so I think in the meantime, you can try and summarize what you learned today.
All right.
So what did you learn today?
I'm still trying to summarize it.
Okay.
Because today is what we went through. Things were kind of very jumpy to me.
That's because we're
it
following
felt-
a question instead of following the syllabus.
Right.
So, I mean, you could go by question. What did you learn from part 1?
Right.
Let me scroll up for those who are watching this VOD. What do you learn from part 1?
Part one, my main takeaway was from question B. Because part one, the FIFO method we have went through it before, so it was rather familiar. Is part two. Part two, I had a clear idea of how to value inventory at the end. So before I would just think that you value it as what it is like whatever you had it at first, it is how it is. And now I know that if there's changes to it, if it's more, you keep it at its original value, and if there's like a loss or like a decrease in the value, you have to choose the lower value.
Okay. Right.
And then the application of prudence theory has been technically applied throughout this question as well.
Okay.
So yeah, I guess I got a clearer understanding of like both of these parts.
Right. Okay. Then alright, I've brought up the syllabus part.
Right.
I pasted it in. Can you see it?
Yeah, I can.
Okay, so let's zoom out a little bit here. So you can see the full thing is all in its glory, right? Impairment loss.
Yeah.
It actually lies here. So where is this?
Other expenses.
So does it affect your gross profit?
It does not actually.
Okay, and this one is not even like a proper wait, I pulled up the different one. But okay, so there is a difference between service and manufacturing business.
Right.
The biggest difference is instead of cost of sales, it's like cost of service, if I'm not wrong.
Right.
Let me just read it out because should be service fee yada yada. Okay, they don't have cost of service, but instead they put it all under other expenses.
Right.
So there's multiple ways to present this. And usually businesses choose the one that best reflect how they run their business.
Right.
So this is where a lot of like the advanced stuff comes in. So let's not touch on that.
Right.
Oh, did I not copy it? Wait, let me try again. There it is. Yeah. So yeah, this one is the one that we're dealing with, right?
Right.
I mean, impairment loss on this is on trade receivables, right? Loss on sale of non-current asset. No, this is not it. Well, in other expenses, there's nothing here as well. Cost of sales and gross profit. Let me just try and see. Impairment loss on trade receivables is something else, by the way. It's not inventory loss. Like this one you get, right? So it's a bit iffy. Since the syllabus did not say it, right, for your exam purposes, I suggest you don't use impairment loss for inventory
Okay.
to be on the safe side, because again, I don't want you to lose marks on things that I say
Right.
that wasn't part of the syllabus.
Okay.
So again, since you are not under a proper teacher, I don't count, by the way.
Yeah, it's
I'll
still
have you know
it's
right
still a
now, I
bit
do
iffy.
not
Yeah.
count.
No, it's all right.
Yeah. So I suggest you download the syllabus.
Okay,
And you could use syllabus as a practice tool.
that is true.
Yeah, so learning outcomes, things like state the role of accounting.
Right.
Just an example, this is the very first thing I saw.
Okay.
Like you could just answer it on your own as practice.
Okay.
So yeah, I think that's more than enough information for tonight.
Yeah.
I'm sorry I have to go through this.
No, it's all right. Honestly, thank you. Cause like, in all honesty, this whole thing is it's rough lah. If I were to go through this myself, it's rough lah.
I see.
Yeah.
Yeah, we both made a lot of mistakes today.
It's okay. We learn from them. We learn from them.
Yeah. Exactly. Then before we end this proper, do you have anything urgent that you want to ask?
I do not actually.
You do not? Okay. Then
Yeah.
if not, then enjoy the rest of your night.
Same to you.
Rest well.
Thank you so much.
I'll see you Friday. Are we still doing Friday?
Yep.
All right. Yeah, have a
All
good
right.
one.
Thank you.
See ya.
Bye-bye.
Okay, so yes, we've come to the end of the actual lesson. I'm just gonna wrap up really quickly here. We did go through just one question, but again, we went through it with as much detail as I can really cover. And I could make clips of certain parts, but I think it could be said in a better way. So I'll think of what I can do to make this sort of long form contents more bite-sized for those who don't want to sit through an hour and a half recording. Yeah, I think for now, that's about it actually. This is the end of the VOD. I will upload this onto onto Linktree. I believe I've set that up. The links are on both my YouTube channel and Twitch. If you're watching this back as a VOD, once again, thank you so much for making it to the end. There's a lot of things that are missing from this actually. I did not put the chat up. Uh, so you guys actually can't see what I'm reading out, which is a little iffy. So I'm gonna try and fix that before the next stream actually. But for now, I think that is all for tonight. Once again, if you have questions regarding this, anything you don't understand, anything that you want to know more about, feel free to drop me a message either on the chat or in the anonymous Q&A. Reason being, everyone understands things in a different way. What works for my student and friend might not work for you, and that is perfectly fine, right? It is perfectly okay to not understand certain concepts that I'm talking about, because I'll admit it, accountancy is dry. It's dry as a desert, and learning it sometimes isn't fun. So yeah, do clarify things that you don't know. I'll try my best to explain to you, but I've said it to my friend. I'll say it to everyone who is watching this still. I am not a professionally trained teacher. I'm also not qualified enough to teach everything in full. I will make mistakes in certain areas. And if you do spot certain mistakes that I make, do correct me. I'm more than willing to make a supplementary video explaining where I went wrong, explaining what was supposed to be the right way after doing my own research, of course. And hopefully we all benefit from this together. And well, that should be the end of my yap. uh, and for those of you who are viewing this anytime in the future, hopefully I'll still be around. I plan to be around for a lot longer than this. So yeah, really, thank you so much. And I'll see you guys some other time. For those who wants to watch stream, it's this Friday, 12 p.m. UTC. And that's all. See ya.